Good morning, fellow option traders, and welcome to the Daily Scan for Wednesday, February 27th, 2013. Yesterday was an interesting day, and I just wanted to jump back, take a look at the news, and see what it did to the market. This is the economic calendar that I usually bring up every day, take a look at from NASDAQ. I wanted to look at yesterday and what it did to the market. So here we have the Case-Shiller Home Index, which has a gold star on it, which could be a market mover. And if we take a look at the prior index for home prices, was a plus 0.6, the consensus was 0.8, and the actual is 0.9. So it says home prices are marching higher. That should be a good sign for the economy, right? Okay. In addition, we had new home sales. Let's take a look at what happened there. 369 prior, consensus 381, actual 437. So the economy is looking good, at least for housing, they say. Alright, that's good news. Let's see, consumer confidence. Alright, prior 58.6, consensus 61, actual 69.6. Consumer confidence is back up and quickly. That should be good news, right? Okay, so then Uncle Ben speaks at 10 o'clock. Well, this is a summary of his speech. Pretty much, he said good things and bad things. He's worried about the sequester, but he says QE, he talked a little bit about QE, didn't really say anything one way or the other. Things are just going to continue at the current pace, which I believe is about $45 billion, new dollars being printed each month and injected into the system, I guess you might say. He also said there is no currency war. Okay, so that's all really nice. And some other things came out at 10 o'clock. All right. Now let's go back to our application here, and just out of curiosity, we'll take a look at what the mini S&P futures did. This is a daily chart. The light gray is the off U.S. hours, and the black is the U.S. market hours. So if we take a look at yesterday, we actually gapped up at 9 o'clock compared to our close the previous day, at least close at the end of the U.S. market. So it was around 1485 at the close. It gapped up yesterday morning to 1494, and at 10 o'clock when all these things came out, it quickly moved down. But around 12 o'clock it started to recover. So I don't know if it was just initial shock, initial reaction. wouldn't call it shock because it was all good news. So I don't know if it was, I don't know. I can't speculate. Even as a guru, I can't speculate why this did this with all that good news and why it moved back up. But it's interesting to note that even though there's good news, it doesn't mean a bull market per se, because the market is based on people's feelings. So I guess the feeling wasn't too good with all that so-called good news yesterday. Alright, so much for the soft information. Let's talk about some hard information. Hard information is what we're looking at for the futures right now. We're seeing pretty flat, and gold is pulling back a little bit after popping above 1600 finally again, and silver is down, back down again, and looking very attractive down here, and so is gold. So if you want to go out and buy some of the hard stuff, the hard metals, now might be a good time to do it. Take a look at the dollar is at 81, which is, it's been kind of hanging around there lately. We can take a peek at a chart, and I figured out why I wasn't getting my news down here. I just had to make this window here a little bit bigger. So when I moved it over like that, my news popped up. Of course, there is no news for the dollar futures. They just don't talk about it. Let's zoom away here and see how we're looking on the weekly chart. And as I mentioned, we've been kind of hanging around this 80 to 82 level for quite a while. 78 to 82 for basically for the last year. All right. I really don't know what that means. It's just when it moves suddenly, then you have to, be a little bit worried if it moves one way or the other. Again, I'm not an expert on that. Let's take a look at our current positions. This is Amazon. This is a bear call that I have, credit spread, and it's actually started making a little bit of money yesterday. We'll take a look on the Analyze tab at the risk profile. We'll see that Amazon moved down a little bit. So here is our short at 260, this level right here, and it's moving down a bit and seems to be picking up some momentum here to the downside. Let's see, Chipotle. We'll take a look at Chipotle next on the Analyze tab. This is a bull put. This is one that we did with about a 20 delta. I'll just take that off of there. We don't need to be confused any more than we already are, right? Still waiting for this one to mature. Have about 3 weeks left on that one to see if it's going to make that move to the upside as we had hoped based on this hook when we got in. Google, take that away too. Google is not working out so well right now. We have a March 805 short on that one. That was an at the money credit spread, and that also was a bull put credit spread right at the money, figuring that Apple was just gonna maybe pull back here a little bit and continue its march up. We got our hook here, and we got in on this day, but unfortunately it opened up nice and moved up and then ran out of gas. So that sometimes happens, but we have until Friday, so we have 2 more days on this to see if it'll make its move back up. MasterCard, our double calendar on this is working out well. Again, this is a March expiration for the shorts, so we will just keep an eye on that one. Take a look at the chart, and these are our break-evens that are on here. So we'd be looking for this movement down here to 490 would be the best way for this to work out. And the reason for that is, as I mentioned many times, as price moves down, IV tends to increase. So we want IV to increase to push this red line, this expiration line up a little bit, and have this bulge in the white line start to move down this way and start bulging up towards that red line. Got time for this one to develop. Price line, another at the money play here for Friday, March 1st. This is actually MAR1 is the first weekly expiration in March, which happens to be this month, March 1st. So don't get confused with that. So this one, let's take a look at the chart. And nice move up yesterday. So we're hoping that I've had that price level in there incorrectly. And let's see here, it's 690. Yes, that's correct. Let's make sure that everything's okay here. All right, so 696, is that where the price is this morning already? 696,709 is the bid ask. That's a good sign. That's a good sign that price line is going to gap up this morning. They had their earnings. 617 was forecasted, and 677 was the actual. So that happened last night. I'm assuming it happened after the market closed. So we're looking for a gap up there. And last but not least is our insurance policy on the spiders. It's up $84 right now, and we're also looking for a market correction. Come down here around 136. Maybe it just kind of passes through it, and as it's passing through it, we'll cash out. If it doesn't pass through it, well, then we won't be able to use our insurance policy, which is the way it happens with insurance policies. Sometimes you get to collect on them, sometimes you don't. You're happy when you have it, though, when it makes a move down here like this. All right. Now let's take a look at our A-plus list. And it was pretty barren when we went through it yesterday. Take a look at Apple first off. In a downtrend, a little hook up here. That could mean that we may be having a setup. We would be looking for stochastic to move up here, a little bit of momentum to the upside, and then a failure and a move back down to the downside. So we're still waiting for that to happen. Let me just bring this one in just a bit more. A bit more. Okay. Still in a very strong downtrend on the weekly. Amazon, we're in Baidu. Baidu. All right, maybe we might be getting a setup here in this recent downtrend. I hope Baidu makes a recovery. We're looking for something maybe to move back up here to 98. But we just don't know. It has to play out. It needs a little bit more time to develop. CF, remember we had an alert go off on that. And it's continuing its cascade to the downside. Chipotle, we're in. No, it was Salesforce that we had the alert come off on. This is not looking real good. We have earnings Thursday, so I'm just going to stay away from that one. I'm not interested right now. I don't know what's going to happen with them. I suspect if I was to make a bet, I would do, what would I do? If I was going to make an earnings bet on this, I would go ahead and do, for Friday expiration, I would do an at-the-money credit spread. Let's take a look at that. If we're looking at a delta of 50, we would have pretty much a 1-to-1 risk-reward ratio. This one, delta is at 60, so it should be even a little bit more on our side. Let's check it out. Yes, it is a hair above $2.50. So a 1-to-1 risk-reward would be, with a $5 spread, would be a $2.50 credit. And here we can see that our credit would be 10 cents more. So if we had a delta of 50, we would probably be at $2.50. But since we have a delta of 60, we are at $2.60. If we have an even higher delta, and we pick a vertical there, then we have $3.25 in credit. And that may not be a bad choice either if Salesforce, I mean, they forecasted things to be not as rosy as what they had thought, and that might be a good play, even at with a short at 155. It's entirely possible for this stock to move down to 155, but probably the safer one would be the 160. So you can go ahead and try that if you want to take a bet on their earnings this week. I don't know. I might. I just don't know. All right. Google, we're in. MasterCard, we are in. Netflix is next. All right, we had a little hook here, actually. This is looking pretty good. So maybe an at the money. So we're looking for, I'm going to put an alert on this, and we are looking for just a little bit of a move up this morning, and it's not the saying to get in, it's just something to say, come and take a look at me, because I want to move this up a little bit more, up to beyond the this high from the day before, which is over here on the roughly hourly chart. It's actually a 78-minute chart. I could just change it to hourly, I guess. But I put it at 78 minutes because I could. So that's what we'd be looking for an alert with if it moves above here, which is entirely possible. And if it does, that would be, let me see here, for expiration this Friday on at the money, bull put, credit spread. It would be at 185 probably. And that's what it would look like on a risk profile, and that's all it's got to do is move up. We're at 216 credit, 283 debit. So we're pretty much 1-to-1 right on that one. So that would be my idea for Netflix for today. If the alert goes off and it looks like it's going to continue its march up. Priceline we're in. And last is PNRA. Alright, PNRA is a little bit confusing. It's right in the middle of its recent range. Is there a calendar that we could do on PNRA, or even an iron condor? Let's take a look at this. Where is our 20 delta? Right around here, so we could do a bear call there, and our 20 delta on the downside is at right here, and that's what it would look like. This iron condor for expiration in March. Okay, so we're talking 150 and 165. Let's go take a look at that chart again. That would be up here. 165 is here, and 150 is way out of range down here if we look at it weekly. 165, 150 is down here someplace. That looks like it would work out pretty well. It'll only take away $500 available for us, and it could pay off with $132. That's a possibility. Or could do a double calendar on it. Let's look at a double calendar just for fun at the same strikes. Take a look at the risk profile. Uncheck these. And when we're talking about the possibility, I think the Iron Condor in this particular instance might be a little bit better. Although we could tighten up these strikes here to 160 and 155. Let's take a look at that. And our double calendar would look like that. And I would tend to maybe want to change this to a put, both of them to puts, with the possibility of making, let's see, it would cost a lot of money to do this at those strikes. So we want to keep our calendars a little bit cheaper than that. I don't know what the ideal amount is, but the double calendar, it just doesn't look good to me. So an Iron Condor, though, looks a lot better. Don't you agree? It's expensive. I mean, from a trading perspective, we're talking, at $1.25 each. That's $5 in trading costs and commissions for me, anyway. But that's still not bad. $132. I might do an Iron Condor on that today. So stand by. I'm gonna make a note, and we'll take a look at that today. Today I'll be packing, so I'll be kind of around pretty much most of the day. Remember, no video tomorrow or Friday. So we're all on our own for those 2 days. And I'll be back Monday. So thanks for watching. That's it for today. Have a great day and happy trading.